Let's get to Robinhood. That is sinking after its latest report. The online broker posting a wider than expected loss. A drop in revenue for Q1. Active users also fell from nearly 18 million a year ago to under 16 million now. The news comes a day after the company said it was cutting 9% of its staff. Shares of Robinhood hitting its lowest level since last year's IPO. In the after-hour session, it is down 11%. Tim.
Look, if they're losing users, obviously major problem. It was one thing to have revenue be stalling and actually falling under the weight of the crypto markets and payment for order flow and some other dynamics. They just made a major acquisition internationally in crypto. They want to be able to offer 24/7. They're getting there. But their demographic, which is what I've said, is obviously what makes this company attractive, not necessarily their current earnings profile, but that this is a group that ultimately should be a very interesting demographic to have, and the stickiness, and that for somebody it's worth it. But the user loss is devastating. The cash burn is devastating, and I'm not sure it's time to nibble here.
Yeah, I mean, if you're not getting the user base, Bonawyn, I don't know what you're getting with this stock, especially when there are some questions about its model still when it comes to payment for order flow, for instance. People don't want to trade when the markets are going down and their faces are getting ripped off.
Unfortunately, they don't. But a lot of times that volatility sets up for a fantastic trading opportunity. So it's a bit oxymoronic there. What you're getting, that was your question. What you're getting here. What you're getting is a potential acquisition target. And I think that's what Tim was hinting at. I know he's mentioned it before. At this point, that's what you're getting. He's mentioned the cash burn, the operating constraints. They just laid off 9% of their workforce. They're slashing SG&A. That tells you that there's some working capital constraints there. I mean, if I playing the same game that Guy did, if I took a step back, took the name off of the chart and looked at it, and then looked at the financials, I would say this is a company that needs a cash infusion. I don't think they're going to be able to issue debt. I don't think they're going to be able to. There's going to be an ability for them to issue additional shares here. But the demographic, that is what you're getting, and someone will likely step in and pay for them. But I mean, that's the risk reward. It's a binary trade, but I think down here, if you're going to play it, they'll likely get acquired by someone who wants that user base.
Yeah, I don't think those users are what you think they are, because all of those altcoins, all of those things that they were buying in 2020 and 2021 are down 80%. If they haven't sold them, that money's just gone away. And so the average account size, we've been talking about it for a year now, is just tiny, and it's not the sort of the thing that I think a larger entity wants to take on, because the cost of servicing those and acquiring new customers. I think the brand is actually the big issue. I think the brand is tarnished. And so to me, with a $15 billion enterprise value, I just don't see any value in the thing.
I see a lot of backlash on Twitter, at least from the people who follow me and people who I follow, for payment for order flow. And that is in part tarnishing this brand.
Right, and we've said it for a while. The existential risk, as it turns out, would be something to happen on that front. Turns out didn't have to happen because the stock's doing it all by themselves. And I'm not trying to be glib here, but, I never thought there was anything particularly innovative about Robinhood, and now the stock is showing you that's exactly the truth. It finds its home at some point. I just don't think it's here. I think people will say at single digits it's cheap. Still nothing cheap about it.